Welcome back to the Closing Room AZ. I'm your host, Jesse Moreno, realtor, investor, and coach, and your straight shooter for everything real estate related here in Phoenix, Arizona. If you're thinking about buying or selling, or just trying to figure out what the heck is going on in this crazy market, you're in the right room, and there's no fluff, there's no fillers, just straight talk, straight conversation, real strategy that you could actually use in today's real estate market. So stick around, don't drop the line. Take some notes, because today we're going to have a special guest. He's going to walk us through what I call Mortgage 101, or the Mortgage Blueprint, so you guys know exactly what mortgage means and how it works. So hey, like I said, don't drop off. Do me a favor, if this show brings you value and you enjoy what you're seeing, leave me a comment, hit subscribe on the button. There's a QR code on the screen. Take a picture of it. That's going to connect you with me directly. And if you have any questions and you want to stay in the loop, that is the best way to get a hold of me, right through that QR code. Other than that, you guys, appreciate you guys hanging out with us today. It's going to be a fantastic show. So let's jump right into it. And before we bring in our guests, let me do a quick shout out to my sponsor of the day, Driggs Title Agency here in Phoenix, Arizona. They have locations in Nevada, here in AZ. They've been in business since 2007. They've done over 200,000 transactions since the beginning of their business here, and that's not a small number, you guys. That's a track record to be recognized for. So they are doing a fantastic job. If you want to give them a call, and I hope that you guys do, you guys can reach him at 602-796-2029. Make sure that you ask for Ignacio Ochoa, and you tell him that you heard about him on the Closing Room AZ. So, all right, well, let's get right into it. Today we're going to kick off a very special 3-part series. It's called the Mortgage Blueprint, and I brought someone that I generally trust, and to break this down the right way, he's going to go ahead and share this information about the Mortgage 101, as I said. I'll tell you this much. I've talked to buyers every single week, and sometimes they have no idea what is going on when we talk about real estate. And this particular person that we have today on the guest is going to break it down for us. And we're going to talk about things, and you're going to hear words such as pre-approvals, debt-to-income ratios. When it comes to financing, right, they're going to talk about things of what's considered a fixed rate and adjustable rate. We're going to have some acronyms that we're going to throw out there, and we're going to do our very best not to confuse you guys as you're listening to this conversation, right? You're going to hear things like DTI, LTV, PMI, all kind of stuff, right? But I want to make sure that you guys know exactly what that means, so there's no confusion, because on this particular show, not only do we have real estate agents and we have investors, but we also have home buyers and sellers, and you guys need to know what these things mean when you're in the loop. So today my guest is Mr. Jorge Montano. Am I saying that right?
You are.
All right, Jorge Montano, mortgage loan officer with CrossCountry Mortgage here in Arizona. George is based out of the Scottsdale location, Scottsdale branch. He works with many buyers across the valley, helping them navigate through different kind of products. We got conventional, we got FHA, right? Fair House stands for Fair Housing Administration. We got the VA, right? Veterans Administration. We got the USDA, which is the United States Department of Agricultural Products. And of course, he's got some specialty loans in the mix throughout. So his company is one of the number one retail mortgage lenders, if I'm not mistaken, in the country. George, welcome to the Closing Room AZ.
Thank you, Jesse. Thank you for having me on. And yeah, pleasure to be here. And let's talk mortgages and, like you said, all the different acronyms, and try not to confuse people, right? But this episode's going to be all about, learning about mortgages and, what the process is like for many people out there that are looking to become homeowners, and, kind of like, hey, how do I start this? Like, I keep hearing all these different things, DPA, DTI, what does it all mean, right? So we're going to break it down for you guys today. I am part of CrossCountry Mortgage. So CrossCountry Mortgage is the number one retailer in the United States. Currently, right now, about 1 in 35 homes is financed through CrossCountry.
Okay.
So that's just on the national level. Now, on the Arizona market, so I happen to work for the number one lending team in Arizona. Last year, we closed about 500 loans, and this year we're on pace to close about 600.
Okay. Wow.
So
that's awesome, man.
Yeah, it's pretty amazing, but stuff like that doesn't happen, just by surprise. It's definitely something that it's a well-oiled machine, right? You have to have a process in place
Sure.
All the right people, that are going to be part of this. So, we've been incredibly lucky that we have partnered with some really great real estate agents. So some great partnerships there, that we have developed over the years. And like you mentioned, we offer a lot of different products. And I think that's what keeps a lot of people coming to us is we're doing a lot of the deals that are supposed to be very hard to do, right? So some of the FHA loans, actually a lot of our business comes from turn down deals from other lenders that could not get the deal done. So through some of the programs that we offer, we find ways that, we can get the clients approved.
To make it work.
Absolutely.
That's good to know, man, because I know you guys are not a bank. You guys are a mortgage lender.
Correct.
And so it gives you access to a bunch of different products that are available. So I know you have a niche for somebody to get them qualified into a property, whether you're refinancing or whether you are buying a home, right? I'm sure you guys got what it takes to get them into it and make it work, right?
Absolutely. Yeah.
So-
And it just all starts with a conversation, right? And kind of figuring out, everybody's different. And that's the main thing is when you're sitting down with a client is finding out, what are they looking to accomplish and then kind of pairing that up with, what product is going to serve best for them.
Yeah, for sure. Absolutely. Gotcha. Well, we're going to break it down for everybody today. And I do have some questions. I know my the folks on my show here that are watching, they want to know certain things and want to hear certain things. And so I've got some questions I want to kind of drive through. And again, this is a 3-part series. So we're going to tackle what we can on this episode. And then we're going to come back to part 2 and we're going to come back part 3. We're going to have 3 parts. And every part in this conversation, man, there's something that you're bringing. There's some type of value, and there's some resources and some benefits behind it. It's going to just educate the listener. If you're on the show now and you're watching, you're listening, take some notes, write it down, invite a guest, do what you got to do because this is some great information that we're going to bring out to them. And if you listen all the way through, I'm going to tell you now. I'll tell you this right now. You're going to be ahead of the game compared to a lot of people that don't know about mortgages. They may have heard about it. They may have an idea what it is. But if you stick around to the end, you're going to know a lot more than you expected as we go through this podcast. So I got some questions for you, Jorge, okay?
Yeah.
I'm going to break them down for you. Let's start with the most basic one. Simplest terms, what is a mortgage?
Yeah. So mortgage, that is a loan that is secured by real property, right? So you come to someone like me, you ask for a loan. Now you have borrowed money against that property that you're buying, so that property becomes collateral, right? So as you're making payments, throughout the years, the idea is that you're going to be building some equity on that property, right? But also, if you were to stop making payments, they could foreclose on the property, right? You're not making a monthly payment. Now, obviously, that's not the idea. The idea is to be able to put you into a home and have you keep that home and have that home become an investment for you in the long run.
Gotcha. All right. Good stuff, man. I'm going to ask you, we're going to talk a little bit about some mortgage products here, some mortgage types. If you could break it down to us a little bit of what they are or what you have or maybe what's the most popular out there. But tell us a little bit about the mortgage loan types that's people need to know about going into it. And by the way, I've had some other guests in here that ask, hey, if I'm a first time buyer, what do you recommend? And I've heard that before. Right? Do I go conventional FHA and stuff like that? So we'll tackle some of that, man. But tell me a little bit about the products, what's out there.
Yeah. So we'll break down, all the products that we have available. Then I'll talk about some of the ones that in the Phoenix market right now are making a lot of noise. So we have all your traditional loan products, like your conventional loan products that are going to require anywhere between 3 to 5% down payment. So if you're a first-time home buyer, typically you can qualify for a lower down payment, which will be about 3% on conventional.
All right.
We have FHA, right, which is going to be a government-backed loan. With FHA, your minimum down payment is 3.5%. Great thing about FHA though is that it does allow you to go as low as 580 on the credit score.
On your credit score. Okay.
Yeah, and FHA we actually can do manual underwrites as well, which that's completely different thing that we can do. But again, talking about how we win some of the buyers, some of the agents that we work with, is by doing some of these difficult loans that are sometimes FHA 580 credit scores. Some people won't touch those, right? We will. You also have VA, right? So this VA is going to be for you veterans, that have served our country, and thank you for serving. If you are a VA watching a veteran that's watching this, there are VA loans available for you that allow 100% financing.
Yeah,
So
sure.
definitely take advantage, if you're a veteran. USDA, this is going to be for like your more rural areas, semi-rural areas.
Yeah.
Another really great product, if you are thinking of moving somewhere outskirts, right? Like Tonopah area, maybe like even Santan out, in the outskirts, some of these areas are going to qualify for USDA. And we have our non-QM products, right? So non-QM is going to be like bank statement loans, right? So bank statement loans, this is great for a lot of self-employed borrowers that maybe you haven't filed taxes, for whatever reason, that you have not filed. And we can actually look at your deposits and qualify you based on what you're depositing in that bank account. So
Gotcha.
Just another way to be able to, get into home ownership. So you don't always have to look at the traditional way, right?
Gotcha.
All the products that I mentioned, great ways to get into home ownership, but sometimes that non-QM is probably going to be the best avenue for some of our borrowers.
Right. And just so you guys know, those that are watching, when he says non-QM, the QM stands for qualified mortgage, right?
Correct.
Non-qualified mortgage.
Non-qualified mortgage.
Right. So this is where you're coming in with just probably what kind? Documentation, just bank statements, right? I mean, it's not your traditional, so you're asking more for what?
Yeah, so like in, say, a bank statement loan, we would just be looking at like the last 12 months or previous 24 months of bank statements. So again, this is for somebody that, maybe has not filed taxes, or maybe, they are filing taxes, but they're not claiming a lot in income. This is another way to, be able to get into home ownership. So
Yeah.
Bank statement has been one of the popular ones that we've been working with.
Yeah, absolutely. And stick around, you guys, because we are going to dive a little deeper into some of these qualifications when we get to our conversation about pre-approval letters and pre-qualification letters and so forth. So we're going to dive a little deeper to that. But this particular product is the non-QM. Just kind of want to throw it out there. It's great for you guys who are investors, right? So for my investors watching this, let me tell you right now, that's a great product to utilize because they have something called a DSCR, right? So if you don't know what that stands for, it stands for debt service coverage ratios. So you're able to utilize the assets in the investment, right? So this is it's a great product overall. But we're going to dive into that a little bit later. So you guys stick around because again, this is just going to be some good info. That's going to be able to educate you guys. So when you guys are out there doing your deals here, you guys know exactly where to get, where your buyers could get placed, or you, if just a buyer, where you could go. All right, let's talk a little bit about the Arizona market right now. Which of the products, and you kind of mentioned a little bit at the beginning, FHA, conventional, what seems to be a little more popular. But what's the trend, man? What are people doing right now? What's more popular right now in the market?
Yeah, I've been doing a lot of FHA deals lately. These seem to make a lot of sense for a lot of the Arizona market. There is programs that offer down payment assistance as low as 580 credit score, and you don't have to even be a first-time home buyer.
Okay.
So a lot of the restrictions,
That's good to know.
a lot of the restrictions with DPAs is that you have to be a first-time home buyer. You have to have a minimum credit score sometimes of 640, 660. And they have a set rate, right? So if the set rate is at 6.75, that's the rate what it is. We can't buy down the rate. I actually work with an FHA DPA that allows you to buy down the rate. So it's a market rate, but if you're working with a great agent that is negotiating salary concessions, we can use part of that money to buy down the rate. We can actually even do an ARM with this product. So
all right.
Locked one up that was 5.125%, 6% concessions. And, we were looking at a market rate of about 6.25% previous to looking at this option. So this made this home way more affordable for this client.
Yeah, for sure. Yeah. FHA seems to be the way to go, right? And we'll talk about a little bit too, because I think the listeners need to know this, that when you put a certain percentage down on an FHA deal, you're going to carry, well, in fact, if I'm not mistaken, I think FHA carries PMI, private mortgage insurance, if you get an FHA loan, when you're putting less than what percentage?
10%.
10%, right? And so it's an added premium cost to your transaction. It's really to insure the lender, no? So in other words, it's in case the clients don't default, they'll make a payment. It's an insurance coverage for the lender, correct?
Correct. Yeah, it's protecting the mortgage.
Protecting the mortgage. Okay.
Yeah.
Yeah. So And we'll talk about that a little bit more as well because there's a lot of information, and I got to be honest with you, man. I got my brain going because I've talked to a lot of lenders that come on my show, and so I know I've been picking up a lot of information, learning things off of this, and I'm like, man, I want to dig in a little deeper. But I know we got some stuff going on in these next couple of episodes that we're going to be doing, so we're going to dive into those. I promise you guys, we're going to get a little deeper into it. And by the way, if we miss something, in case at the end of this podcast, or at the at the end of the podcast, but on the bottom of the description, you'll have that information where you could be able to reach out to Jorge here, and he can answer your questions as well. Or if you leave a comment, I promise you we'll get back to you and we'll answer your questions. We're going to dive into the pre-approval process because I think also as we go in, as you find yourself a deal or you find yourself the product you're going to move yourself into, whether it be FHA, convention, or whatever the case may be, then we need to know exactly what that pre-approval process looks like. So can you maybe walk us through it a little bit? Tell us what a pre-approval and what is it, why does that matter?
Yeah, absolutely. So, one thing that I'll throw out there is that you're going to hear the word pre-qual versus pre-approval,
Yeah.
right? So the main difference on those is a pre-qual is just me and you having a conversation, right? So I ask you questions about your credit, about your income. So this is information that I'm just jotting down, putting down on the application, but I haven't verified anything, right?
Right.
So at that point, it's just a conversation. That's what a pre-qual is. And I can give you an idea of what you should qualify for, but it does not become official until we have the documents, right? So if you're a W-2 employee, I'm going to need the last 2 years of your W-2s, more than likely your last 2 pay stubs, and your bank statements. That's going to be the essentials of being pre-approved. At that point, I've already verified your income. I've already looked at your assets. So I can run the automated underwriting system to issue a pre-approval. Now you can go home house shopping.
Yeah. Dude, good point, brother. I appreciate you sharing that, man, because that is something that gets missed on the realtor side, right? I don't know how many times I could tell you that realtors are like, hey, pre-qual is good enough. Let's move forward. Let's go find your property. And then they find out once they make an offer and they start gathering the documents that the buyer doesn't qualify, right? So I'm glad you explained the difference. I always tell my clients, look, we're going to get you pre-approved, period. I mean, it's important. I'd rather go that route. Not only that, I'll tell you what, when you go the pre-approval process of it, it's a commitment as well, right? It tells me that the buyers that I'm representing are committed to trying to find a property. They're not just, wasting time, looky-loos, or whatever you want to look at it as, right? So that's really key, doing the pre-approval, man, for sure. And not only that, for you guys who are realtors, I'm going to tell you this much more, man, it brings power to the closing table. So when you're making an offer, right, when you're making an offer and the seller are looking at it, if it's his pre-approval, it's going to hold value a little bit more than a pre-qual because they know now that it's been qualified. Assets have been verified, income has been verified, credit has been pulled, and all that good stuff, man. So, if you guys are going to make an offer on a property, make sure that you get yourself a pre-approval because when you take that to the closing table, meaning when you take it to the seller, man, it's going to just speak more volumes than it will be if you just got a pre-qual to that. All right, I'm going to move on. Let's talk about documents. And you kind of brought it up a little bit, man. So let's kind of hit them off really quick. But what documents are required to do a pre-approval?
Yeah, so I touched a little bit on W-2 employees, right? So let's touch on self-employed borrowers, right?
Yeah.
What are we going to need from them? Typically, we're going to ask for the last 2 years of their taxes, so personal and business, just depending on what type of business they have. So we're going to need those last 2 years. We're also going to need to show assets, right? So like their bank statements, if they have any retirement accounts. That's typically what we're going to ask for to get the pre-approval for a self-employed borrower.
Right. Gotcha. All right. Cool. Again, great information, Jorge, man, because it's important they understand what they need to bring to the table if you're self-employed. And I'm sure there's probably a few more other things on top of that, man. But again, reach out to Jorge here. His number will be on at the end, on the comment side, and get more info from him, man, because it's important that you guys know exactly what you need to bring to the table to get that pre-approval going. Now, let's talk a little bit about what can make or break a deal on a pre-approval, right? So, hey, I need to get pre-approval. I need to get pre-approved here. What can make or break a deal on a pre-approval?
Yeah, so, the number one thing is probably going to be credit, right? That's going to outweigh far more than anything else. Some of the other things, there's workarounds, right? So, if somebody is a low earner, maybe their debt to income ratio is a little bit higher, but that could be solved by having, a co-signer on there, right? So there's times where we may have to go that route, but credit score is going to be one of those where it's, there's no gray area, right? You're either at the above 580 credit score that we need, or you're not.
Right.
But the good news is that for those that are below 580, we offer our own in-house credit repair specialist.
You do? Okay.
Yeah,
Cool.
so she's really awesome, who we work with. So shout out to Jessica. She takes care of all of our clients, and we would go through the information on what they need in order to get their credit score above that 580. So there's times where, there's going to be, it's a 1 month plan. Sometimes it could be a 3 month plan, or, I've even seen things as much as 6 months or a year. But credit score is going to be one of those factors that it's either going to allow us to keep going with the process, or, hey, let's pump the brakes. Let's look at what we need to fix. Your debt to income ratio, I touched on this. Your debt to income ratio is how much money goes in, how much money goes out each month, right? So on an FHA deal, we can go up to about a 56.99%.
Wow.
So it gives us a little bit of more room. That's why,
Sure.
talking about FHA and being popular here in the Phoenix area, that's a lot of the reason, right? Because unfortunately, we home prices have, gone up over the last years, and income just hasn't really gone up as much, right? So we're seeing a lot more people that have a little bit of higher income or debt to income ratios, but that could be one of those factors that can be a hard stop, right? But there's ways around that. There's ways where we can use some of the DPAs to pay down debt. So like if you have a car payment that's $600 a month, but maybe you only owe $6,000 or $7,000, we can actually use the DPA to pay that car off. Now you just eliminated $500 or $600 off of your monthly obligation.
Yeah.
Now all of a sudden, you go from a 60% DTI down to a 50, 54%. Now it's an approvable deal. So there's ways, how to, I don't want to say manipulate, but how to deal with a high DTI, right? It's just how you start looking at the deal. Sometimes you got to start thinking outside the box, what's going to work. And down payment, right? Down payment is huge. In the Phoenix market, you're going to have your 3 to 5% down payment. There is down payment assistance programs, like I mentioned. But if you're somebody that maybe, you haven't saved up enough money for a down payment, reach out, because I've talked to so many people that are like, I don't have $20,000. Like the last person I talked to said that I needed $20,000 to be able to buy a house. And I'm like, okay, well, talk to me more about that. Like, what do you currently have,
Sure.
And sometimes it could help with as little as $2,500 that they have. And, now we go after getting the down payment assistance. The realtor, will negotiate the seller concessions to pay the closing costs. So again, it's just having the conversation with the client. Every situation is going to be different.
Gotcha. Cool, man. Thank you for sharing that. One more question before we kind of wrap up this particular series and we get into our next one here. But what's the number one mistake buyers make when they're getting ready to apply for a loan?
Not consulting with a professional about where their credit stands. A lot of the times they will rely on other people that may not be giving them the best advice, right? So maybe they go and open a new credit card. Opening a new credit card, depending on what your credit looks like, it can make or break a deal.
Yeah, good point, man, for sure.
I mean, we see that. We see people that go and buy a car because somebody told them that they needed to build credit, and they thought that buying, that $800, $900 a month truck payment was going to get their credit, to where it needs to be.
Right.
So we see that mistake happen a lot. They don't consult with a professional first. Like, it's going to give them guidance on what's going to be the best way to, get your credit score or whatever it is to be able to get approved. So those kind of things do hurt their debt to income ratio. It could even hurt their credit score, because if they're taking on a lot of debt and they miss a payment, that's going to hurt their credit score. So maybe a month ago, they were in the 600s, DTI was healthy, they went and bought this new car, and
now
DTI is up,
right,
and credit score might have came down because, they pulled their credit a bunch of times because the salesperson at the car dealership didn't tell them that their credit was going to be pulled 10 times.
Yeah, shoot. That's crazy. Yeah, for sure. So there you go. There you have it. Don't go opening up credit or something crazy. I think it's always important first to call your lender before you do anything else. You're going to apply for a loan. Hey, Mr. Lender, I'm going to apply for a deal here. What's your advice before I start the process? And then boom, he's going to tell you these things, right? Hey, don't go running your credit. Don't go buy a new vehicle. You know, maybe at where you're at now, you're just where you need to be at the cusp to getting approved. And those extra credit runs, pulls, could lower your credit score. Buying something else could increase your payments, which is going to maybe put you above the debt to income ratio qualifications, right? So, good points to all those, man.
And
Appreciate
don't switch
you.
jobs.
And don't switch.
I've seen that happen as well, where somebody
Yeah.
will quit their job, middle of the transaction.
Yeah.
That's not good either.
Yeah. Well, look, don't do it prior to getting applying, and don't even do it when you're in the deal, when it's an escrow, right? Don't do any of that. All right, man. Thank you so much, man. Huge value in this particular episode. We covered what mortgage actually is, right? We talked about the 5 loan types, right? And hopefully you guys remember, right? FHA, VA, conventional, the non-qualifying,
USDA.
and the USDA, right? I mean, there's your 5. So, there you go, man. And then we talked a little bit about, and didn't get too deep in depth into it, but we talked about the pre-approval, right? So, Jorge, man, I mean, that's real talk all the time. We appreciate you sharing that information. What's the best way to get a hold of you?
Yeah, thank you, Jesse. Thank you for having me on again.
Of course, man.
Best way to reach me, it's going to be through my cell phone. It's 520-350-5090. A lot of zeros in there, so you can't forget that.
All right. Well, and all that information will be on my podcast. It's at the bottom of the podcast here, you guys. So all this information is there. So in case you guys didn't write that down, or whatever the case may be, you'll still get his info at the bottom of the podcast here. So you guys make sure you use that. Next time in part 2, we're going to dive a little bit deeper. We're going to talk about interest rates, the closing costs. We're going to talk about PMI, right? Private mortgage insurance. And the costly mistake buyers make during this process. So you don't want to miss it. So you got to make sure you come back, bring a friend, bring a relative, whatever it is, so they can catch up, listen to podcast 1, have them listen to it, and then obviously get into part 2 because it's going to be pretty good. You guys are going to enjoy it. If this episode, again, man, brought you guys some value, please make sure you hit subscribe, like it. Click on that QR code that you see up there. It's going to connect you directly to me. And I got to tell you what, if you do, I see those QR codes, those connections, and I'll reach out to you and answer any questions you may have. It doesn't matter what it is. If you guys just want to say, what's up, how you doing, Jesse, or just whatever it is, man, you reach out to me. I always take my calls. Love to help you out. By the way, don't forget to subscribe. You can find me on Instagram and YouTube channel under the Closing Room AZ. Hit me with the DM on a topic. I'll be more than glad to put one together for you guys. Again, if you have questions, you just want to say, what's up? I'm always listening, so make sure you use that. This is the Closing Room AZ. I am Jesse Moreno. Where real conversations drive real results all the time, you guys. Thank you for being here, hanging out with us. Have a blessed week, and remember, set no limits.